If you've been stuck in the cycle of buying prop accounts, resetting them, and telling yourself the next one will be different, then this video is for you, because I'm about to show you how I took a payout in 5 weeks and how you can do the same. The reason most traders fail in prop firms isn't because they can't read a chart, it's because they don't have a system. And the system is two things: a trading model and strict money management. What you need to understand is the inconsistent approach creates inconsistent results. And inside a prop account with $2,000 of trailing drawdown, inconsistency blows accounts fast. In this video, I'm breaking down the exact framework I used, the risk management, the drawdown protocol, the exact times I put myself in front of the charts when setups form. And I'll walk you through 5 trading days, 4 winning days, and 1 losing day, so that you can see everything that goes into profitable trading. If you're serious about stopping the reset cycle and getting the consistent payouts, let's get into it. The only prop firm guide you need in 2026, whether you're going to be trading Apex, Tradeify, Top Step, My Funded Futures, 50K account, 100K account, 150K account, it does not matter. What I'm about to show you in this video is everything you need, regardless of the company, regardless of the size account you're trading. If you apply these rules and these protocols, you will notice an immediate difference in your prop trading, and you'll notice more money staying in your bank account, not going out every month to these prop companies. So what we will be breaking down in this video is going to be an account overview of my trading from the middle of January to the middle of February. 4 weeks and change, technically 5 weeks total, to secure a 6% return. I also want you to understand the reason it took a while to make a 6% return was because this was done in the hardest market conditions we have ever seen in trading. So you can see here above what the price action looked like, and you're going to see how I navigated these conditions. Just because it's choppy, it doesn't mean you can't make money, but you have to know what you're doing. At the end of this video, you're also going to see some of the trades I took to secure this payout, and you can see how I'm scalping and how I'm trading even in tight consolidations, because if you know what you're doing, there's always money to be made. So getting into the specifics here, you can see it's a 50K account. I ended the balance with $3,000 net profit in 20 trading days. I really want to take your attention to the 20 trading days here. This wasn't done in a rush. It wasn't done in 1 week. It wasn't even done in 2 weeks. It was actually done in 5 with very low risk and very consistent money management and applying my models. So I want you to see that if you are going to be consistent with prop firms and taking payouts, you have to completely change your mindset. And you can't be in a rush. You can't be impulsive. You can't have short-term thinking driving your trading business. And then lastly, you'll see a total return of 6%, which in about a month of work is not bad. Fund managers, if they do 15 to 20% in a year, that is exceptional. So if you're doing 6% return in 4 to 5 weeks, that is absolutely phenomenal. And the best part is it's all done with low risk, not gambling, not resetting accounts every single week, consistent execution week in, week out. So now getting into the actual specifics of the performance metrics, you'll see that I had an 84% win rate per day. This is because I am high frequency trading, so I will trade a couple sessions a day, and I'll get into all that good stuff here in a moment. But I am trading with 70% plus strike rate when I'm in sync. When price action is good, I'm comfortable at 70% plus strike rate. You'll see the average winning day was about $200. And the reason why I wanted to do this is because many traders that I work with personally are actually trading prop firms. And they think they need to risk $200, $300, and all they're doing is blowing their accounts. And that's completely avoidable if you know what you're doing. And when you know what you're doing, you don't have to risk a lot to make a lot. And that's how you beat the prop game. So if you are going to trade prop, you have to understand it's a game and you have to know how to beat it. So you have to know how to play by the rules. And if you have an underfunded, undercapitalized account with 2K, you need to know what you're doing. So I'm average on my winning trades, $200, averaging on my losing days, $160. So you can see my average losing days are much smaller than my winning days. And then you can see the max drawdown, the biggest red day I had was negative 329. So staying within my daily loss limit, which I'll get into in a moment, as to how you can start to apply rules, risk management, money management to your trading so that you can get these results as well. So you can see that my biggest red day was never more than $350. So you can see here, a lot of green days, also a lot of red days, but what you'll also see is slow days. You'll see days where I'm just plus 60, plus 90. And what it's very important for you to understand is slow growth is normal, right? It's okay to have a break-even day, a small red day. Where the problem comes in is when you get frustrated, you get impulsive, and then you think, oh, $90 isn't enough. I need to get to 300. I need to get to my goal. And then now that causes you to make impulsive decisions. be in a rush and do things that are outside your model. And that's why you can't see longevity over the long run, because you're completely blowing your entire account because of one small mistake. So it's very easy to avoid this, but you do have to have a game plan. You do have to refer to it every single day, because if you don't have a trading plan, you will not get results like this. You will not have an equity curve that looks like this. And in fact, your equity curve will look like a roller coaster. And that's no way to run your trading business. What you want in an equity curve is a smooth upslope. There's going to be losing trades. There's going to be losing days. But it's very important to understand that as long as you keep them under control, as long as you follow your plan and you know what you're doing, you can be long-term profitable with very minimal effort. And when I say minimal effort, it's not that it's easy. It's that once you know what you're doing, it's not a lot to show up at the right time, wait for a specific signature, enter, manage risk, make profit at the end of the month. That's how simple trading is once you understand what you're doing. And that's what we're going to get into in this video. So first things first, we have to break down what prop firms are so that you have a comprehensive understanding of the rules, the opportunity that prop firms present, and then I'll get into the full checklist that you can start applying to your trading to start making some real bank. Prop firms, you pay a fee, right? So you go to their website, you pay a fee, and with that fee, you can either trade an evaluation account, which the evaluation is whether they evaluate your skill set, and then if you can make a return in that evaluation, they will then give you the opportunity to work towards a payout. The other fee you can pay is you can pay a fee directly and start trading towards a payout right away. And that's the difference between an evaluation account and a straight to funded, which I'll get into much more here in a moment. But you have to understand that you pay a fee and then you have the opportunity to make a payout. What's important to understand here is that there's a huge ROI in prop firms because you can get started with low upfront capital. So you can start trading futures for less than $100 if you know what you're doing, right? So again, this is a great opportunity, but if you don't know what you're doing, then you're just going to light your money on fire just as if you were trading a live account, right? So you absolutely have to understand what you're doing. You have to have a plan. You have to know how you're going to execute it and how you're going to get your account to a payout, right? So that has to be understood. So I don't want you to think it's, oh, wow, $100 and I can turn myself into a millionaire overnight. You can make a lot of money with this, but you have to know what you're doing. So once you pay the fee, you can trade their capital and you technically have access to a certain amount of leverage, which you're able to trade. If you make a return on those accounts, you can then take withdrawals if you follow their rules. So they're going to have certain rules, which we'll get into here in a moment, that you have to abide by. And this is what makes prop firm trading a little more tricky than trading a live account, because in a live account, there is no rules, right? It's your money, you trade, you make it, you keep it, you lose it, it's gone, right? Very simple. However, with a prop firm, there's more rules that you have to follow, meaning you can only stay within a certain amount of the drawdown. Only a certain amount of profit can be made in a day, and I'll get into all those specific rules here, but you have to know the rules of prop so that you can beat the game, because most people jump into prop treating it like a live account and they wonder why they're in the situation that they're in, right? But if you want different, you have to think different. And if only 1% of traders, less than 1%, are able to take a payout, you should start thinking like the minority, not the majority. And then you keep a percentage, right? So you trade their capital, you follow the rules, and then you keep 80 to 90% of the profits that you've generated with these accounts. So we're going to look at a 50K account breakdown. First things first, it's very important for you to understand that this 50K here is a marketing number. The real account size you have is $2,000 because that is your max drawdown. So before you even start considering the rules, how you're going to trade, you have a $2,000 account, not a $50,000 account. So looking at the actual rules here, we have the 50K account, comes out to $328 with code AT. Don't be in a rush to purchase an account. Learn what you're doing first. Develop a plan like I'm about to show you here, then go into these companies. Do not rush. Do not think, wow, well, he just showed me it's so easy, so I'm just going to go rush into an account. It's not. It was a lot of hard work for me to get to this point. It's going to be hard work for you to get to a point to where you're eating by your own hands, but it absolutely is possible. So $328 one-time fee for a instant funding, meaning you pay this one-time fee and you have access to it, no additional payments. Looking at the rules here, you can have a maximum of 5 accounts. So when you get really good at this, what I just showed you with one account, don't think this is just limited to one account. I'm just showing you one account so you can learn the skill, but this does apply to 2 accounts, 3 accounts, 5 accounts, 20 accounts, and you can see how this can balloon if you acquire the skills. So you can have up to maximum 5 accounts, and then you have a 20% consistency rule. What that means is you can't make more than 20% of your profit in one given trading day. So if you have a 50K account, The profit goal that you have to make is 6%. So you have to make $3,000. 20% of $3,000 is $600. So your biggest winning day cannot be more than $600. So you have to hit consistent base hits like you saw me doing. So I'm trading low risk. My losses are small, my wins are small, but it's damn sure consistent. So with that in mind, you have to understand that you're not trying to hit home runs here. You're not trying to, make $15,000 in a trade. These accounts aren't for that. If you want to swing big and make big returns, take a payout, fund your own live account. Then from there's no rules and you can do whatever you please. But you have to understand that as long as you're going to play in the sandbox with prop firms, you have to understand the rules. And then you have a daily loss limit of 1,250. You should never, ever have the company have to lock you out, right? If you've lost so much control over yourself that you blew over 2%, over $1,000, over half of your $2,000 account, and the company had to actually remove you and tell you you can't trade anymore, that is just unacceptable. So this daily loss limit should never even be a factor, because if you're losing more than half of your account in one day, you're definitely not following a checklist and a trading plan like I'm about to show you, and you have no business donating your money to these prop firms. And then next, you have the max drawdown of $2,000. So we talked about how the account is technically $50K, but $2,000 is your real drawdown because that's what you can lose before the account is revoked from you. So you actually have a $2,000 account, and you need to trade based off that account size. And then below you see the max contracts. You can either trade 4 minis or 40 micros. 4 minis is complete suicide in something like this. They actually want you to trade that size so you can blow their account, reset, and give them more of your hard-earned money, right? However, you're going to see with the sizing that I'm trading, I'm risking less than 150 per trade. So I'm sizing with micros or minis, depending on if I'm trading S&P. My risk is no more than $150 to $200. So you don't want to go near this high-end leverage. If you're trading 40 micros or 4 minis with a $2,000 account, that is absolute suicide. And the reason they give you all these contracts to trade is because they want you to do it, right? So you have to understand how to beat the game, how to think different. All right, so going into the comparison of evaluation and straight to funded. Evaluation is cheaper, but you have to pass the account first, meaning you need to have a 6% return, so a $3,000 return on the evaluation, which will then allow you to become funded. Once you're funded, you can then start working towards a payout. Straight to funded, however, costs more. So you can see to pay for a 50K account, it's not $97, so less than $100 to start trading futures in a evaluation, and it's $328 to start trading in a direct funded account. Now, personally, I prefer straight to funded, and this is because I'm already a profitable trader. I've been trading live accounts for years. I'm just now getting back into props since obviously there's so much opportunity here. But I want you to keep in mind that for me personally, I don't want to waste mental capital making 6% on an evaluation. In the time that I could have made 6% in an evaluation, I could have already taken a payout and have more money in my bank account trading a straight to funded or just trading my live accounts. So keep in mind that straight to funded is good, but you have to know what you're doing. Really, you have to know what you're doing in both, right? So if you don't know what you're doing in evaluation, you'll easily light that money on fire, just like a straight to funded. So neither of these is a saving grace for not having skill. So you need to have the skill regardless of which one you go into. Because what you don't want to think, this is what most people do, it's only $100, 5 accounts, so that's $500. So yeah, I can reset a few times, and then before you know it, 2-3 weeks in, you're in thousands of dollars of money put into these firms. And it's easily avoidable by just simply knowing what you're doing. So very important to understand, if you don't have a system, which is a model and defined money management, none of these are going to be a saving grace, right? So you have to know what you're doing first before you step into the shark-infested waters. And then some things you want to be mindful of when you're considering what firm you're going to use to trade through. You want to consider the rules, right? You want end-of-day drawdown. End-of-day drawdown means they calculate the drawdown at the end of the day. Some firms have predatory rules like intraday trailing drawdown, which means while you're in a trade, an unrealized profit, that trailing drawdown will follow you. That is a scam, it's a gimmick, and it's designed to make something already hard next to near impossible. And that's why people rack up these bills with Apex and other companies that have these predatory rules. And it is possible to make payouts with those accounts, but it's making something hard and it's making it even more difficult. So when you're looking at firms and you're considering who you're going to trade with, look at the rules, make sure there's no goofy hidden rules that are designed to trip you up. Make sure it's reasonable, right? Like a reasonable consistency rule. You don't want like a 10% consistency rule where now you can't make more than $300 in a day because that's just going to lead to other problems. So you want to make sure they have solid rules. This is why I personally like to use Tradeify. I've been working with them since starting this year. I took a payout from them, received it in less than 24 hours. So overall, amazing experience with this company, which is why I'm recommending them. All right, so now that you understand kind of how prop firms work, the game, let's talk about why accounts are getting blown. No system, right? So you have no model, or at least one that you're following consistently, and no money management, or again, money management that you're not following consistently. So you have to have a system. And a lot of words are thrown around the trading industry: psychology, systems, models, all this stuff. What does it mean? It means you need to know what you're going to trade on, and you need to know how you're going to manage your money. And what a system will do is it'll help you stay disciplined. It'll anchor your decisions so that when you take a loss, right, your emotions start flaring, and then you want to do what? Size up, double the size, try to make it back right away, take more trades, take a third, fourth, fifth trade, right? And that's what's leading to inconsistency. So if you have a system, if you have something to anchor your decisions to every single time you sit down in front of your charts, you make this business easy. And again, a system is a model, which is a simple way to execute and engage with price every single time. And money management, which is when this happens, I risk this much. If I lose, I risk this much. If I win, I risk this much. And it stays very consistent. So that's all a system is. It's a model coupled with money management. And if you're still trying to understand what a model and money management is so that you can have a system, be sure to check out our free course where I talk about a trading plan, money management, and teach you all the basics. Because without the basics, you don't even stand a chance. And third is the consistency rules. So I've already touched on that, how if you have to make 3K, 20% of 3K is $600, and your biggest winning day cannot be more than $600. Because if you earn more than $600, to maintain that 20% consistency, you now have a bigger profit goal that you need to achieve. So you don't want to over leverage. You don't want to try to hit home runs here. This is not a live account. Again, it's a prop firm. You can absolutely generate 5 figures a month from these prop firms, but you have to understand the rules and you have to understand how to play their game, right? Because if you're going to step into these companies, give them a fee and have the opportunity for a big ROI on that, right? Because if you look at it, for example, $328 to make a $2,000 payout, do the math on the multiplier on that return on investment. It's astronomical. So if you want the opportunity for the astronomical return, you have to know what you're doing. You have to know how to play the game by their rules. And then lastly, the thing I see mostly with traders I work with is an inconsistent approach leads to inconsistent results, right? So every time you come to the market, you're not trading a consistent model. You're not following consistent money management, and you're not doing anything consistently, as a matter of fact. And that's why you're getting inconsistent results, right? So if you want consistent results, you have to bring consistency to the market in the sense of, this is my model. I'm only trading this. I'm only trading high probability. I'm only trading inside my kill zone, my time window. And if it's not that, I'm not going to trade it, right? Also, whenever you take a loss, right? Over trading, trying to make it back, you took a loss in the session that you're supposed to be trading, but I'm going to trade the lunch hour. I'm going to trade these other times of the day when you shouldn't. And then because you shouldn't take that loss, when you do, now it makes you emotional. Now you're on tilt. And now, man, I shouldn't have taken that loss. Now I got to fix it because I can't finish the day down 500. Yeah, and then let me go in and fix it. Now you're down 1K. Now, well, shit, I can't finish the day down 1K. I got to try to fix this. So then you blow the entire account, and then we're right back into the same cycle the next week. That has to stop. And the way it stops is you have to show up with consistency. You need to have a plan and a checklist like I'm about to show you. So here are the rules that I'm following before I'm trading these prop accounts. And this is an exact checklist that you can take and apply to yourself. And if you want this full checklist, you can go into our free Discord where you'll be able to see the Prop Firm Lab channel. And here you can check out the checklist, download it, fill out your own trading plan so that you know exactly what you're going to do next week when you're trading. All right, so the first thing to understand in the rules and in the checklist is you have to understand the real account size you're working with. So I already talked about that, how they market a 50K account, but it's really only a 2K account. If you're trading a $100,000 account, it's really only a $3,000 account. If you're trading a $150,000 account, it's only $4,500. So regardless of the account size you're working with, you can take what I'm sharing here and apply it to your prop trading. So whenever you're coming up with a game plan, the most important thing in this business is risk management. 99% of every losing trader out there does not apply good risk and good money management. So the way you set yourself apart is you have to know what you're doing in terms of managing your money and managing your risk. The first step in that is understanding the actual account size you're trading, not being manipulated by the marketing tactics thinking, I have a 150K account, time to trade 3 minis, and you're right out the door the same trading day. So that's easily avoidable, but first things first, you have to understand the account you're working with and base your risk and base your trading approach on that. So again, 2K drawdown is the real account, not 50K. have a simple model that repeats. So I'm going to go into price action here in a moment, show you some of the trades that I took to get this payout, but it's very important that you have a simple model that repeats. You have to have a way of engaging with price action that's the same every single time. You know where you're going to get in, you know where your stop loss is going to go, you know how you're going to take profit, you know what your risk to reward is going to be. Everything is already calculated and accounted for. So you have to have a simple model and it has to repeat. Simple is very important here because I speak with a lot of traders, I work with a lot of traders, and traders that take 5 to 10 minutes to explain their model, right? Yeah, I'm trading SMT, the daily open, power of 3, monthly power of 3. I'm using macros, I'm using opening ranges. Yeah, the NWOG thing also, I think that's kind of cool. And yeah, fair value gaps, right? Inversions. That's not a model, right? That's you having a bunch of concepts in your mind and you have no idea what to actually do with it. So if you want to execute consistently, you have to have a simple model that repeats. My model, which is the one set up for life, you can check that out in the link above. It's the model I look for at all times of the day. I specifically taught it to you guys in the 9:30 open, but that logic, as you're going to see, applies to the PM session, applies to Asia, London, and the AM session as well. So you need to have a simple model that's consistent, that repeats, so that you can execute the same way every single time. And that's how you're going to start being consistent. That's how you're going to start doing this the right way. And then the next thing for your checklist, once you have a model that repeats, is you need to have consistent risk management. My risk management for the 50K account was maximum risk is 125 to 150 per trade, no more than 350 daily max. So I never would allow myself to go over a $350 losing day. You may say, wow, that's too much for me. Then that's good to recognize. So maybe your max losing day could only be 300 or could only be 250, right? So it's very important for you to understand where you're comfortable in this. A big part of this business is self-discovery, right? Because what works for somebody may not work for you. You can learn from them. You can figure out how to have a consistent approach, how to develop a trading plan, how to read price, how to journal, how to backtest, all the things that you need to do to get profitable. You can learn that from somebody else. But when it comes down to actually taking the trades, being comfortable in your own skin and doing this as an independently profitable trader, you have to know what you're doing and you have to be comfortable with your own risk. So while this is what works for me, this is not financial advice, and this is not me saying to do the same exact thing, right? You're going to have to tailor this to your personality. This is simply what works for me. I was trading this in a very, very hard market condition. So I wanted to size down. And furthermore, I have a lot of guys and gals that I'm working with that are trading these prop accounts. And I wanted to make this video specifically for them, but I figured I'd share it on YouTube for everybody to benefit from. But the key is here, understanding how to approach the risk management. And if you're trading 100K or 150K account, you're just gonna have to apply the same percentage that I'm doing here to a 50K to the account that you're trading. So again, while I'm mainly talking about a 50K here, it's the same rules for any account that you're trading. You just have to understand the math. And at the end of the day, this is all just rudimentary math. So before I ever even get into a trade, before I hit the buy or the sell button to enter, my risk is already calculated. I know what I'm going to lose on that transaction, and I know what I stand to make on that transaction. I know where I'm going to cut the trade. I know where I'm going to take profit. Everything is defined. And lastly, as I already covered, the firm has a daily loss limit of, I think, 1,250 on a 50K account, but that should never be the case. You should never have to go to a point to where the actual company has to remove you from the account. And lastly, you may think, well, Dylan, man, I can't make money with $125 to $150 risk. Again, when you know what you're doing, you don't have to risk a lot to make a lot. Thinking you need to gamble and high risk and minis, that's a sign that you're not ready yet and you still don't know what you're doing. You don't need to gamble, hit the lottery, swing the bat hard every single time you sit down to make consistent money. If you have a cookie cutter that repeats, it's consistent, you can sit down and make bank every single week. I don't care how hard the market is. It can chop the rest of the year, but there's still fresh bread if you know what you're doing. Drawdown protocol. So now when you go into drawdown, you have to have procedures for it. In this case, once I have one loss, I continued with the same risk. Once I had a second loss, I would then reduce risk. So let's say I lost at 125 and then I lost at 125 again. Now I'm down 250. So I'll generally reduce my risk on that third trade if I take one, and I'll reduce the risk down to 100. So, or 75 or 80 or whatever the case may be in that market structure that I'm trading. And then what you see that'll do is I can still take 3 losing trades and it's not going to blow my entire account. It's not going to give back all my gains. It's not going to cause me to go into a tailspin because now I'm emotional and blow up my entire account. So you have to have your drawdown protocols. And then when you get near the daily max, you just have to stop for the day, come back the next session, come back the next day, but you absolutely have to have a hard stop. Because if you're not in sync with price, stop pushing in sloppy market structure. Wait for it to clean up. There will be cleaner price action. There will be more easy price runs, but you have to be alive when they happen. And if you die in low probability price action, gambling and chop, you're not going to be around for the easy trades. So you always have to live to fight another day. Kill zones. You have to have strict operating hours. Every successful business has defined operating hours. They're not just doing random shit, right? They open at a certain time, they close at a certain time. Your trading needs to be the same exact way, because what used to happen for me when I was unprofitable 4 or 5 years ago, when I could never do this, I would be doing what? A lot of the stuff that you guys are doing, right? I know I'm supposed to trade the morning, but man, the morning was tough. I didn't really get what I was looking for. So, man, 11:30 is looking kind of good right now. And let me take this trade. And then you get stuck in chop. Or, right, when I was in university, I'm in class in the PM session. It's the last hour. It's power hour. So it's time to pull my laptop out and take some trades, baby, after having a difficult morning session. And eventually you learn that you can't trade like that. You can't run your business on impulses, on emotions, and start pulling your laptop out and trading in the middle of lecture. I've done all of it. So that's how I've learned to do this the right way. All the dumb shit that you guys have probably thought of doing or even are doing, I've been there and done that in stunning fashion. So there's nothing like losing your teacher's monthly salary while you're sitting there watching a lecture. But that stuff is easily avoidable, but you have to have defined windows and kill zones. When I'm trading, I'm not sitting at the chart all day anymore, right? I'm not sitting there from 9:30 to the 4 o'clock close. I'm not worried about every fluctuation. I'm not emotionally thinking, oh my God, it's going to run away from me. No, I'm not going to take a trade. This is going to be the last one ever. Profitable traders aren't thinking like that, right? They have their time of day. They know when they're going to execute. They show up, they handle their business, and then they come back at the next designated hour. So what that looks like for me is I'll generally trade the morning session, 9:30 to 10:30. That's my sweet spot. And you'll learn that in the One Setup for Life. Love that time of day. It's when the most volatility, the best price runs are forming, and it's usually easy money if you know what you're looking for. Now, what I'll also do if I'm scalping or I'm trading in a more high frequency nature, I can then come back in the PM session and I can trade after 1:30. If I trade the PM session, generally I won't do anything with Asia. However, if I trade the AM session, don't really like anything in the PM, I am able to come back in the Asian session. So that's how I kind of schedule. So that's how I schedule my trading day. If I don't get what I'm looking for in the morning, I'm never concerned. I have a lot more opportunities forming. But also, if I trade well in the morning, the market's delivering clean, I get what I'm looking for, I won't come back in the PM or Asia. I'll just enjoy the rest of my day, handling business, doing recordings, doing other things I need to do outside of the charts. So that's kind of how I go about structuring the time I'm trading, and I keep it very efficient. I know what I'm looking for. I know exactly the time these price runs are going to happen, and I know exactly how I'm going to execute on these price runs that are occurring. So I'm sitting down in my defined hours. I'm not, allowing the charts to sweet talk me and the trade in the lunch hour, trade in the PM. Yeah, just stay up. Fuck your sleep, man. Just trade London now, right? All the impulsive things that we used to do when we first started. But what are you doing in London? Have you backtested London? Have you studied it? Have you studied your model? Have you watched hours of price action in London? No. So why are you risking your money in it, right? So things you want to think through. If you do want to add more sessions and trade more times of the day, study more. Know what you're doing. And then from there, it'll be easy to go into these different times of the day and sort out price action, as you're going to see me show you here in a moment. And then lastly, you need a trade cap, right? Because once you start taking multiple transactions, you're spending mental capital. So you spend capital when you take a trade, you pay commissions, and then whatever you pay in the win or the loss. But you're also spending mental capital when you're trading as well. So when you take a second, third trade, and then you start getting into 3, 4, 5 trades, your emotional control is dropping drastically. Because whenever you're in front of the charts, you're having to exercise a lot of emotional control, a lot of discipline. You're constantly calculating, running things through your mind, and it's very draining on you to trade. So if you're constantly trading and you're action hound gambling 15, 30 trades a day, that's why it's stressful. That's why you're in a cycle of boom bust and you've never seen consistency for longer than a month. So the way you're going to counteract that is you need a trade cap. You need to know what you're doing. You need to know how many shots you're going to give yourself, and it all needs to be controlled. You need to know what you're going to risk, how many trades you're willing to take, what time you're going to take these trades, and how you're going to engage with the trades that are forming. So it may seem like a lot, but it's actually very simple, and this is required. If you are trading prop firms without a simple checklist like this, that's why you're getting the results that you're getting. So what you want to do is you want to take a step back, stop feeding the beast with more credit card payments, and just take a step back. Learn what you're doing. Develop a checklist, and you will see how simple this can be for you. And again, the trade cap is going to be how you stop hemorrhaging money. Before you can make money, you can't bleed it all out and hemorrhage it all out on a single trading day. So when you have a trade cap, you have your risk management. This is what's going to take you from bleeding all your capital out on one idea to living to fight another day and being long-term profitable. And again, if you want the full checklist so that you can fill this out and have your own so that you can trade the next session with a full checklist with an actual plan, then you can join the free Discord link below, download that plan, and start using it going forward. Now, for the last thing here, this isn't as much of a rule, but it's more of a mindset thing that I want to communicate to you, because those that I've worked with that have gotten payouts in prop firms, that have replaced their daily income in prop firm payouts, they have a different mindset than the trader that's constantly blowing accounts. And what that is being in a rush. So you're going to see with this account here, it took me 5 weeks to make 6%. Now I can do it a whole lot faster in cleaner price action with more risk, but the purpose of this account was to teach those I'm working with. So I allowed myself 5 weeks to make a 6% goal. And the key is not to be in a rush to reach your goal. If you really take a step back, all the impulsiveness, all the bad decisions, all the being in a rush, all the things that led to you having a huge credit card bill or never seeing consistency, all that stems from you being in a rush. So if you just slow down, allow it to happen over time, what you're going to notice is you're actually going to put yourself in a state of mind that's going to allow it to happen faster. So paradoxically, by slowing down, you'll actually speed up the process because you'll be in the right mind state to actually allow it to happen. So very important for you to understand, very important paradigm shift is just to relax. Stop being in a rush. Stop trying to take a payout next week, in the next 2 weeks. Give yourself 6 weeks to take a payout. And guess what? It'll probably happen for you. And if you do, and you may be thinking, well, yeah, Dylan, one payout in 6 weeks, that's $2,000. How am I supposed to live off that? You're right, you're not, but you're trying to get profitable. And then what happens when you do that consistently? You're not stressed out. You're not high risk gambling, frustrated every day, blowing accounts, throwing shit around the office. You'll instead be consistent. You'll be calm. And then what happens when you do that one payout across 5 accounts, 10 accounts, right? 20 accounts. Ooh, right? Now you're 2-3 times what a day job would pay you with the same skill set, with the same consistent approach to executing it. So what you need to understand, and what I tell those I work with, is your goal is not to make a lot of money. There's so much fucking money out here waiting for you to get profitable. You need to be in a rush to get the skill. If you get the skill, the money is abundant. But because you're chasing the money and not even regarding the skill, that's why you're in this cycle that you're in. So the way you stop that cycle is focus on the skill building, focus on doing the right things, and stop just chasing this money around like a chicken with your head cut off. And that's why you're getting these results, because you're flustered, you're anxious, you're emotional, you're all tense. Profitable traders are relaxed. They know what they're doing. They're comfortable with what they're doing. And this is what I want for you. So as a recap to the rules here, you need to know the real account size, a simple model, risk management. You need a drawdown protocol. You need to know your kill zones. When are you trading? When are you hunting your setup? And you need a trade cap. Screenshot this, use it going forward. And again, check out the free Discord to download it yourself. All right, so now we're going to get into 5 trading days here. I'm going to show you 4 winning days and 1 losing day. And the losing day is going to have a few losing trades in it. So you can see that I even lose as well, but it's all in how it's managed. So what you're going to see here, because we are in a higher time frame consolidation, it's just a lot of scalping, a lot of easy in, out, get paid, move to the sidelines, low hanging fruit. So you're going to see these trades here. And again, 6% return in 5 weeks is very modest. That's not like a crazy lofty return. And you're going to see it was done very easily with low hanging fruit executions. I get in, what's the easy low hanging fruit? I pay myself, I move to the sidelines, and either I trade my live accounts or I just take it easy the rest of the day. So with prop accounts, you don't need to be super scalper. You don't need to buy the low of the day and hold it to the high of the day. You don't need to sell the high of the day and cover at the low of the day. All you need is a consistent model that repeats and know what you're looking for. Let's get into it. So 5-minute chart here, we can see we're bullish. This is the 9:30 open here. And then we see the market rallies higher towards the new week opening gap. So what you'll see is that this is a Monday. Generally, Mondays like to fill and trade to the new week opening gap. If you've been with me for any length of time, you know that's something we consistently look for. And obviously, my models are consistent. They repeat. So let's get into it. We understand that the draw is higher, new week opening gap. What did we talk about timing? I know exactly when my setups are forming. That is going to be 9:30 to 10:30, specifically 9:30 to 10, that opening range. So let's get into it here. We understand the draws the new week opening gap. Do I need the new week opening gap to be profitable? Absolutely not. So at 9:30, we see we open here, we run higher, and then we drop down into this fair value gap here. I'm suspecting the market's going to draw the new week opening gap. This down close candle becomes an order block. Reason being is because it doesn't even get to 50% of this fair value gap. So I'm buying here inside the bullish order block, and I'm covering at 10 handles. I don't care if the market runs another 20 handles, right? And that's the difference in a profitable trader and an unprofitable trader. An unprofitable trader is thinking, man, I could have gotten all this run here. There was so much more. But a consistent trader is happy that they know their model, it repeats, and they're able to get their pound of flesh from the market every time they sit down. So that's what you want to start thinking in the direction of, not, oh man, how could I catch this run from low to high? Because that's not making you any money up to this point. So what do you have to lose by trying to do this the right way? So long here, inside the order block, you can see I'm buying here inside that opening price. And then once we get to 5 points, I start scaling out, and then I let the last run to 10 points here. So I'm entering in the 80s, covering around the 90s, and then you can see that's a nice little 2-to-1. And then that gives me a return of $350 per account. And then you can see my risk is well below 150, because if I'm trading with 10 micros and my stop is less than 5 points, you can see here at a 3-point stop, that's about 150. So I'm risking 150 to make over 300. So that is a better than 2-to-1 risk reward, as you can see here with the RR tool, in the direction of the new week opening gap, my draw on liquidity, and time of day when the market is supposed to run. That's it. We're looking for the market to move to liquidity and efficiency, and we're looking for it to happen on schedule. That's it. For the next trade here, you can see we have a large gap here. This was a Sunday evening. So this is one of my Asian session models. So this is not the morning session anymore. We're looking at 7 o'clock here, which is the Asia session open. We open down with a large new week opening gap. We understand that in the proper context, gaps like to get filled, but now we need the timing element. 7 o'clock is the opening range for the Asia session. So we drop down into this fair value gap here and breaker. We use it as support. I immediately see that and I buy this down close candle or bullish order block. Now, the reason why I wanted to include this example here is because I didn't get my full take profit on this trade. And sometimes that's going to happen too. And I wanted to walk you through instances that work perfect. So I knew what the market was drawing to. I knew we'd want to trade up into this new week opening gap here. The stuff I teach those in my mentorship, very consistent models. And we have a bullish order block and I'm looking for it to trade up into it. However, once we got to the low of the new week opening gap here, the market started stalling. So what I did was I covered more, right? Because the low hanging fruit exit was just the low of the new week opening gap. But I was expecting it to draw into it at least to the lower quadrant. But as it got there, it started stalling. So I took one off, took more off. As it kept stalling, took more off. And then what you'll see is I ended up actually taking off most of the position at the new week opening gap low. And I only made like 220, 200 something. But if I would have said, you know what, my goal is 300, I have to make $300. Let me go back in there and take more trades. That would be unprofitable trading, because I'm doing what? I'm not following the model. I'm following, hey, I want to make more money today because fuck it, why not? And that's why a lot of traders are unprofitable, because they're just emotionally doing things and not following a game plan. So you can see from the order block at the right time, runs right to new week opening gap. Beautiful, easy money. And also macro window, little bonus for you. Moving right along, we also have Asia. So open at 7 o'clock. Asia session kill zone opening range opens here. We have buy side and we have sell side. So again, one setup for life. Looks very familiar, doesn't it? That's because that one setup for life is simply understanding liquidity and time of day. So what you'll understand is if you learn that one setup for life that I taught that happens at 9:30, you'll see that if you understand the openings at all these different times of the day, that setup is repeating in multiple places. And you'll see me executing on it here. So we have sell side building and buy side building. We have the 7 o'clock open. What liquidity do they run to first? Sell side. And then we do what? We reject, we displace, we create a fair value gap. You'll see my entry here on the fair value gap. So I'm buying as we're dropping into this fair value gap here. My stop loss is below the midpoint of this candle. So this large fair value gap here in white, midpoint's right about here. My stop loss was just below it. I'll throw this in here as well. The reason I expected the market not to trade below the consequent encroachment or the midpoint here was because we have this fair value gap on the left side of the curve here. So when you have two fair value gaps overlapping, that's a balanced price range. You never want to see it violate below consequent encroachment. So I can enter here, put the stop at the lower end of the fair value gap, trusting it won't even need to go down there. And then where am I going to take my profit? Just like smart money, above the buy stops here. If I'm long, I need to sell my position. I want to sell it to buyers. And there's going to be buyers above these equal highs, and the market runs up into it. So again, very simple trading, time, and it's either moving to liquidity or in efficiency. Don't overcomplicate it. And then you can see here trading one mini and then getting a $285 profit. Entry at 79, stop at 72. So I'm risking about 140 to make about 280. So again, about a 2-to-1 risk reward, just low hanging fruit above the high here because it's also the Asian session as well. Moving right along here, we have the 9:30 open. So we understand time. And now what do we see before 9:30? We drop down, we took out these lows here, and then we have these obvious relative equal highs here. So it's reasonable for the market to want to expand up into those levels. That's the draw. 9:30 is the time. Looking at this here, the market rallied off 930, went long here, stopped below this swing low here because the market retraced, indicated it was bullish. We have those equal highs there at the 439 level. Enter here, stop below the low, and then I cover, and then you can see about a $550 return with 4 micro contracts. This one here shows 12, and that's just because I accidentally entered, fat fingered it, and then I had to close out and get back in, but it was actually only a 4 micro position. So those that say micros don't make money have no idea what they're talking about, turn them off. $500, $1,000 day trading micro contracts. So again, you don't need to risk a lot when you know what you're doing, right? If you feel like you need to risk a lot, if you feel like you need big size to be consistently profitable, it's because you still don't have a full handle on what you're doing yet, which it's okay. Let this be the wake up call to start doing this the right way. So looking at this here, I went long here, stopped below the low, and then you can see holding for the 15-minute highs that we determined was the draw on liquidity. So you can see entry, tight risk management, over 2 to 1, and you can see risking 4 micros here. The reason I did 4 micros is because you can see it's about a 33 handle stop, so I wanted to keep that risk very tight. So you can see from here, 930, 1030, that's that timing aspect. And then the market's either moving to liquidity or an efficiency. In this case, it's an old high, easy money. Moving right along here, I want to show you now the losing day here, because as always, if there's winning days, there's going to be losing days, but it's on how you manage it. So these are the 3 trades I took. I wanted to show you one of my more difficult days where I actually took 3 losing trades, which this was a very difficult Asian session here. Generally, Asia can tend to consolidate. If you know it's going to consolidate, you can trade that if you understand what you're doing. However, there's going to be some days where it's difficult. And as long as you manage your risk, as you can see here, it's not going to cause you to blow your account. Doesn't mean you're a shit trader, right? It just means it just wasn't your day. Stop it, manage your risk, come back another day. So what you'll see is I tried to take a long here. I took a partial here inside this order block before we got up to the high here, but then it retraced and stopped me out. So I had a small green trade here. Once it stopped me out, I then reversed it short. So you'll see here, then I then took this fair value gap short, expecting it to want to run out the sell side here. It then traded higher and stopped me out of that trade. I'm like, okay, went long, small green. This loss here took me out, so it's not going lower. So, I'm willing to take one more shot higher because I'm still well within my risk parameters of 135 here. So even on a losing day, which I had a small winner, and then 2 losers after that, negative 135. And then you'll see these are the 3 trades here that did not work out. I was able to get a small partial off on this one, but then the other 2 were just straight losses. But you can see negative 135. Now, impulsive, reckless Dylan, right, years ago, would have said, well, shit, man, we're down to 150. Oh, God, I need to make this drawdown back. I'm going to need to size down. God, this is going to take forever. So let's just do it right now. Let's just fix all this drawdown. And then you go and you trade more chop with more leverage. And then this day turns into negative 500, negative 1,000. And now if I added days like that into this calendar, into this P&L calendar, it would have delayed my success, or I wouldn't have reached success at all, because those short-term days that spiral out of control would be the very thing that prevents my profitability. And I know I'm speaking right to you guys when that happens. You have to be able to do this here. You have to be able to take losses, and you have to be able to walk away and come back when it's clean. Like you've just seen in the previous examples, there's always price runs. There's always trades. And it's easy when you know what you're looking for. But the hard part about this business is being able to stop when it's hard. Because this is a tough decision. Even for me, who's been doing this for a while profitably, it's still not the most comfortable thing to have a small red day and walk away. Right? But I literally have to tell myself, like, okay, you know what happens if you go down this road. So why are you even going to do it? Walk away, come back when it's easy, and then you see the results that gives. So with that in mind, you don't want to feel impulsive. You don't want to feel in a rush. As soon as you start feeling heightened emotionally, you immediately need to shut off your broker, close your charts, and go do something else. That's what I do, and that's what helps me stay long-term consistent. So I was just getting asked by one of my clients that I work with as it relates to, well, what does your schedule look like as a full-time day trader? It's not a lot of trading. I sit down at these key times when I know these price runs are likely to happen. And when I do, I execute. Whatever the outcome is, I go on about my day. It took me a long time to get to that point. But once you get there, you can finally see how easy trading can be for you. And then as you see here, losing days, winning days, but consistent execution absolutely generates payouts. I don't want you to focus on this $2,000 here because that doesn't matter for you. What does is the skill set and how you can replicate this consistently. There's no doubt in my mind that I'm going to be able to do this again next month, do this again the month after that, the year after that. But it's because I have a consistent skill set. I know what I do is replicable. I'm not gambling. I'm not over leveraged. and I can sleep well at night knowing that my trading business is being ran smoothly. And that's what I want for you guys as well. So I shared a lot of things here with you guys in this video. I want the main takeaway to be this. If you follow a plan, you will get paid. And if you cannot follow your rules, none of this is going to work. It doesn't matter how much you study price action, doesn't matter how many YouTube videos you watch. If you cannot follow your rules or even have rules to begin with, this will not work for you, right? So if you keep changing your size, chasing losses, over trading, that needs to stop, because as long as you keep doing those things, you're never going to allow your trading business to be long-term consistent. And I want to emphasize this. Traders who are getting consistent payouts, they're not guessing. They're not hoping something's magically just going to happen for them and they're going to win the lottery and get lucky over leveraging on their next trade. That's not what's happening at all in the mind of a profitable trader. A profitable trader has their game plan. They know what they're going to execute. They're comfortable in their own skin, and they're simply just showing up, and it's another day in the office. And if you're ready to start applying what you've learned here and start working towards a payout, you can use Tradeify, code AT, link below for the best discounts. I've used Tradeify this year, have taken a payout from them. Funds hit the bank in less than 24 hours. Overall, super smooth experience with their customer support. I will be bringing my team on to trade with them. And overall, very solid experience. And we're going to be banking with props the whole 2026. Hope you join me. See you on the next one.